Let's look at the substantive procedures for valuation, allocation, and accuracy of inventory, then plus classification and presentation of inventory. Let's start with valuation, allocation, and then accuracy. So how do we confirm valuation, allocation, and accuracy of inventory? The first substantive procedure is obtain a copy of the final inventory listing. So the final inventory listing is a list that shows every product that the company has in stock. It can be raw materials, finished goods, or work in progress. So obtain a copy of the final inventory listing and agree the total to the journal ledger and then financial statements and see if they are matching. So this can be to confirm accuracy, to see if they're matching. Then secondly, trace test counts back to the inventory listing. So test count, it's like the auditor can count inventory on their own and then they trace back to the inventory listing and see if they're matching. Then thirdly, cast the inventory listing to ensure that it is mathematically correct by multiplying the quantity and then the price. So the auditor can decide to recalculate things that are recorded on the inventory list, by multiplying the quantity and the price and see if the amount that was recorded is actually correct. Then another substantive procedure is vouch. Vouch is like confirming. Vouch a sample of inventory items to supplier invoices to ensure that it's correctly valued. Like confirm a sample of inventory that was recorded in the financial statements or in the journal ledger to the supplier invoices and see if it was correctly valued. Then another one is obtain the cost records for a sample of finished goods, work in progress, and then raw materials. Then another one is you can agree raw material costs to the recent purchase invoices and then prices to see if they're matching, and if they are not matching, you find out why. Then you can agree labor costs to payroll records and see if they are the same, and if they're not, you also find out why. Another substantive procedure is confirm that manufacturing overheads are properly allocated based on the normal level of production by comparing the overhead costs and the budgeted standard overhead costs. So manufacturing overheads, these are like the indirect expenses that are incurred during manufacturing. So you compare what was planned or what was budgeted and then what was actually spent or what was actually incurred during the manufacturing, and then in case there is a difference between the budget and the real one, then you investigate the difference. Then another substantive procedure is that confirm that costs which do not qualify as costs of production, like administration overhead, selling expenses, and abnormal amounts of wasted materials, etc., are treated as expenses in the profit or loss. Another one is where standard costing is used. Standard costing is like a practice of predicting the costs that will be involved in manufacturing. You just predict. So where standard costing is used, you test a sample of inventory to check what they based on to predict those costs. Then you compare the predicted costs with the actual costs that were incurred, and in case there is any difference, you investigate the differences. Another procedure is confirm that there is an appropriate basis of valuation when they're determining the value of inventory, like they are basing on reasonable things or reasonable grounds. So you can confirm this by discussing with management about the appropriateness of valuation of inventory. Maybe they were using the first in, first out method, stuff like that, and you confirm. Then another one is you get a list of the aging inventory, like inventory that is getting outdated, to identify the inventory that is slow moving and the obsolete items that may need writing down. Because when inventory becomes outdated, it is written down from the books, like it's removed from the books, so it can no longer be sold. So you get a list of the aging inventory to identify the slow moving and then the obsolete items that may need writing down. Another substantive procedure is confirm that inventory is valued at the lower of cost and then net realizable value. According to IAS 2, inventory is supposed to be recorded at the lower of cost and then net realizable value. So the auditor is supposed to make sure of that. And this can be done by comparing the cost of inventory on the final inventory list to the prices at which inventory has been sold before and then after the year end, to ascertain whether there is a need for writing down. The procedures are many, but you can just pick 5 to 7 that you understand. So another procedure is if significant levels of finished goods remain unsold for an unusual period of time, like in case they have been maybe selling within 1 month, but then that stock has remained this time around for like 6 months. So you discuss with management and then you ask them why they think that is happening, why finished goods have remained unsold for an unusual period. Then another one is you can compare the gross profit margin to management accounts, then to the previous year's gross profit, and then the industry average, to see if they're the same, whether there is an increase or a decrease. Then you investigate the differences. Then another one is you can compare the inventory turnover days to the previous year and then the industry average. So these are one of the simple procedures that you can cram. Compare gross profit margin of this year to the previous year and then industry average. Compare the inventory turnover days to the previous year and industry average, and investigate the differences in case they are there. Another section is classification. Classification, it is ensuring that inventory is classified in the correct accounts. So the substantive procedures are 2. You review the inventory listing that shows all the inventory in stock to ensure that inventory has been properly classified between raw materials, work in progress, and then finished goods. Then another one is you read the notes to the accounts relating to inventory to ensure that they are understandable. So those are the 2 substantive procedures that can help you to ensure that inventory is classified in its correct accounts. Review listing of inventory to ensure that what is regarded as raw materials is recorded under raw materials, then separated from work in progress, and then finished goods. Then after, you can read the notes. Then lastly, we have presentation. So here the substantive procedures that can be performed. First is review financial statements to confirm whether inventory valuation methods are accurately disclosed. Then secondly, you read the notes to the financial statements to ensure that the information is accurate and properly presented at the appropriate amounts. So that is presentation. And when it comes to presentation, classification, and then cutoff, they have the same substantive procedures, same controls, same test of controls.